All right, welcome back to Market Day Report. Let's see how things are shaping up. We just had a surprise happen in the cattle. Let's see if we've gotten any stability when it comes to our grains. Let's bring up a corn board and see what's happening there. This is where it was last time we visited. 395 and 3/4 is last in Sept. It's up 2.5. 410 and 1/4 was the last in D's as well, up 2.5 cents there. No change in corn from the last time we visited. Let's take a look at beans. They were down about 14 cents. I guess we've added a little bit to that. Look at this. We'll go right to the nose. 1084 and 3/4 is last there. We're a penny and a quarter off the low of the day. Well, now we're about what 3/4 of a cent off the low. 15 and 1/4 cents lower. And no beans. 1084 and 1/4. Boy, who would have thunk it, right? That's soybeans. Let's move over to the wheat. Chicago wheat. That's up here. 7 cents higher at 577 and a half. That's a penny and a quarter off the high of the day there. March is up 6 cents to 620 and 1/4. And that's about a penny and 3/4 off of the high of the day there. That's wheat. That's Chicago. Let's go to the Kansas City wheat. That's the hard red. We got a 5 1/4 cent gain in SEP 582 and a half. We went out to the March. 5.5 cents better there to 615 and a half. How about spring wheat in Minneapolis? That's up 4 1/4 cents. That's SEP 621 and 3/4 is last there. And again, March is up 2 3/4 cents to 655 and 1/4. Both of them about 3 cents off the highs. Let's take a look at cotton. Cotton is going to be the D's contract. That's new crop, 24 points lower to 70.81. That's cotton. All right, let's bring in our guest analyst. Our next guest analyst is going to be Tommy Grisafi. He's with Advanced Trading, coming to us from, I think, Valparaiso, Indiana. There we go. Tommy, yesterday was bad. Today's not that much better. A little bit of a bounce, but really, these prices really took it on the chin.
Yeah, it's you got to take off your producer hat. We've been preaching. I don't know. I've been on this channel for a few years, but we've always known this. This day could come. Now it's come. So when I did my live stream today, I said ag bankers are preparing for huge losses. If we can't get the attention of the farmer, let's get the attention of the banker and say, do you realize what just happened here? Do you realize that a farmer who had a cost production of 550 for old crop bushels is getting ready to sell 350 cash? There's some of that out there. Actually, more than you'd think, because you've done a good job of telling people also, hey, the USDA says there's a lot of old crop out there. Now, there's something happening in the cash market where we broke 16 cents yesterday, and the cash market went up 10 cents. And for some reason, farmers are running around saying, see, I told you we're running out. They made the basis better. That has been the same story from the beginning. The American farmer is strong on cash, not as strong as they were 6 months or a year ago. But as the American farmer gets ready to turn 2023 bushels, they're going to have a birthday. And as 2023 bushels have a birthday, the American farmer is showing you that they could be so stubborn not to sell it that you're going to have to bid 10 cents higher in a down 18-cent market. For those of you at home, that's still an 8-cent loss. So without taking off your shoes, Scotty, the markets are having big losses, and it's coming at the cost of the producer. And I wish we could help more people. We always do like helping people. I have a question for you. I'll toss it back to you before we go on break. I sat in that chair last week, and I had a chance to talk to a lot of people on this show. How could there be, this is the question, this is your big chance to shine. How could there be so many smart people out there helping people, and people are paying for these services, yet the farmers is undersold? We have 30 seconds, Scott.
I think it's because emotions take over, and I could say, there's a lot of folks like you out there, or folks that are brokers and say they have newsletters, and they're not on this show, but they send me a lot of those, right? I get them from a lot of people that want to be on the show by sending me their newsletters. And I just feel bad for the farmers, because if you really listen to all these newsletters, the market was going back up, $6 corn, here we come. I mean, $13 beans. I mean, and they're still blaming the sell-off on whatever they want to blame it on, thinking that there's going to be a turnaround. Now, there might be at some point in time. But how big can that turnaround be if we've got 61% of 2023's crop still stored on farm? I mean, how big? It's going to be met with some good selling there. I mean, the last short cover rally from funds was met with good selling from on-farm storage and the farmer. So I think emotions can get in the way, and sometimes you only want to listen to what you want to listen to.
I think that's called cognitive dissonance.
Well, it's called a echo chamber where I come from, and I think that's the problem. And so they get caught up in that, and these are the situations that we're in. It's a deer in the headlights. So that's my answer. We're going to go away. Need to pay some bills. We're going to come back and talk more with Tommy Grisafi about the livestock. We'll be right back after this. All right, welcome back. Let's talk about some livestock. Boy, changed. The last time we went, it changed big time. It's come back a little bit from those changes, so we have a little bit of a bounce. Let's take a look. I got live cattle pulled up. Now we're off $1.50 in August, 182.85. But look at the lows were two bucks ago. We were down 350 at one point. Wow. Look at the D's. That's down $1.70 to 185.55, and again, that's $2 off the lows there too. So we have recovered a little bit. I guess that's the positive I'm going to take away from that. Feeders, they've also recovered a little bit. They were down about $4 at some point in time. August is down $2.90 to 256.27. And if you look at, say, even the NOVE, that's down $2.72 to 257.77. And again, that's $2 off the low roughly there too. So boy, oh boy, that's what we've got going on in feeders. They bounced a little bit. I guess that's good news. Lean hogs, there's nothing here that's green either. August is now down $1. That was the one high. That was the one higher market where 88.52 is last there, just 12 cents off the low, and we got a $1.55 sell-off in the D's to 64.17. Let's bring back in Mr. Tommy Grisafi to tell us what he thinks about what's going on over there. Tommy, about a half hour ago, maybe 45 minutes ago, took a turn for the worse, a big turn for the worse, and really sold off hard.
Yeah. First of all, you have to realize what elevated prices we're at. Also, the cash market's trading much higher than the futures market, and people have said either the futures are going to catch up or the cash will break, or they could just stay separated. I mean, that is what a basis is, right? We talked about that in the last segment, how the corn cash market, people are paying up for corn, yet the futures are dropping. But seasonally, and you talked about it last week on the show I was watching, is that once we get through grilling season, I know yet later on Cow Guy, we're going to talk a little bit about money and credit cards. When you're at someone's house, everything looks great. They're putting out these beautiful meals, but someone had to pay for all that, right? And so the cost, the 4th of July holiday was one of the last major purchases of beef and pork and chicken, and obviously. So seasonally, I had some people who were aggressively hedging. They were making some margin calls last week, and they're now just looking at it with that sell-off, their small profit. Of course, they own the physical cattle, so they didn't mind when they were making the margin calls. Having a banker and having the mentality, that psychology to understand you got to send in 25, 50 grand a day because you have so many thousands of cattle, it takes a special person. So for a real quick tidbit, if you don't like selling futures and you don't like buying puts and all that other fancy stuff, go do LRP. LRP is a very simple, clean way of getting a pound of beef protected. Back to you, Scotty.
I mean, you're right, and it's not hindsight. We've been talking about, it was a fairly precariously high market, and this isn't to say that it's over either. I mean, we just had some data out that kind of punctured it just a tad. But if you've got these great prices, that doesn't matter if it's corn, wheat, or beans, beef, or chicken. Doesn't matter. Put a floor underneath it. I think that's a great example of how quickly they can pull the rug out, and they do when they do it. And it gets, if you're not looking at it on a minute-by-minute basis, it can really cost you some money. So,
yeah, Scotty, like you told me when you bought your new Ferrari, you had it insured, so it's no different. These farmers are walking around with tens of Ferraris in their yards. Back to you.
I'd buy one if I could get in it. How about that? All right, that's I just can't get in the dang thing. So there you go. It's a Hummer now. Thank you very much, Tommy. Tommy Grisafi, Advanced Trading. Bring it back. But yeah, they just pull the rug underneath these guys in the cattle market. Boy, oh boy.
It's just tough times. I mean, boy, as if they're not facing enough, right? Thank you, Scott.